Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello and welcome to ThePrint Softcover, our new platform to launch books online amidst the pandemic. Today's launch is of a book titled Everything Started as Nothing, How to Win the Startup Battle. It is authored by Bhaskar Majumdar. He's an entrepreneur turned early stage investor. He's the founding partner of Unicorn India Ventures Limited. The company has invested in around 30 startups in India and in UK. The book is a Rupa Publication. So we'll first launch the book and then I'll ask you some questions. Congratulations.
Thank you very much, Remya.
Hope the book has many, advice has a lot of advice for startup founders on what they can do correct in their startup journey. So I want to ask you, begin by asking you that what would be your advice to entrepreneurs who are just looking at probably starting their own venture?
Remya, this book is for all of those who are embarking on the startup journey. This is equally valid for young entrepreneurs who are just out of colleges, as well as for seasoned execs who are looking after a successful corporate stint to get onto entrepreneurship. Unfortunately, over the last decade, startups have sort of got glamorized, especially with all due respects to the media and the multitude of, awards platforms that are there, 30 under 30, 40 under 40, etc. And nowadays, I come across a number of founders who want to start the entrepreneurial journey, bitten more by the glamour quotient, if you will, rather than understanding what exactly they want out of life. And for me, this is a recipe of disaster. What I have wanted to do through this book is to encourage entrepreneurship, tell them to enter into it, but basically dream with their eyes open, so that they know what the travails and tribulations of being a startup founder is all about.
But what mistakes do you think that startups typically make when they are at least starting off?
The classical mistakes they make is, let me just give you a couple of mistakes that often they tend to make. One is, it's a very lonely journey out there. So you cannot be a single founder. Firstly, even as a fund, we tend to invest in businesses which have co-founders because, of the risk involved being a single founder. One of the common mistakes people make is they tend to think that the co-founder has to be identical to them, someone with whom they'd like to share a beer or have a drink. But while being good friends is a great sign for being co-founders, you fundamentally need to have a complementarity of skill sets, complementarity of, the mindset, so that when someone is at a high, the other person sort of brings him down to earth to say, we've got action to do, and vice versa. So that is one common mistake which I see. You tend to work with your best friends as co-founders. The second is, more often than not, you get caught with the day-to-day trappings. One of the biggest difficulties a startup founder faces is what I call they need to have an elevator mindset. Is at one level, they have to be at the real ground, understanding the day-to-day nitty-gritties of the business, and yet they would have to have an elevator view of the larger strategic intent of the business and the perspective of it. So, both of this is very difficult to have. And the third one, which is basically more for folks when I started the business, for more seasoned seasoned execs who are becoming entrepreneurs, they cannot live in the anonymity of being an entrepreneur. So if you're working in a large company, you're known by the company you're keeping, your company calling card becomes your status symbol, but suddenly you're a nobody. And I faced this during my journey as well.
Any other examples you can cite of people who've tried, successful professionals who've tried to start a startup, probably, have succeeded or have not succeeded?
As I keep saying, and that is what this book is all about, Ramya. It's what I call the entrepreneurial DNA. There are a number of examples where very successful students, research scientists, executives, they fail when they start the entrepreneurial journey, because fundamentally what they don't have, what I refer to as the DNA. Uh, you know, and without going into specific of names of those who succeeded names are a plenty. In our portfolio itself, we tend to invest in senior execs who in their mid 40s, late 40s, after a 20 odd year corporate stint, want to come out and do something. So we constantly back them, and success stories of that are plenty. There are, of course, very well known people, very senior execs who've left their jobs, got funding on the back of their corporate careers, but unable to scale these businesses up. So, and for me, the single factor which I keep talking about is, we all know of the number of emotional quotient, the social quotient, the intellectual quotient, which are key for success. But the fundamental need, which I think an entrepreneur needs to have, is what I call the adversity quotient, which is all about taking the knock on a daily basis, but coming out of it unscathed, that tomorrow is just another day.
Right. So, why do startups fail? And I want to, if you could give how does it differ in India and probably in other countries which you're familiar with? As in, is there a difference in the startup scene in India and other countries?
Yeah, it's a very good question actually, because we invest in UK as well as in India. Fundamentally, India is a growth market, and these markets are not growing that fast. So what tends to happen over here is you typically have businesses where the entrepreneurs are much more seasoned guys, folks who are in their, as I mentioned, late 40s, early 50s, who worked in a particular industry for a long time, want to come and do something within that industry. And then they do something which is deep tech quite often in these markets. But unfortunately, these are smaller markets. So there's a huge role today for the tech being developed in the Western markets and then going over into the emerging markets for the scaling up. India, on the other hand, is fundamentally a huge scale-up market. So, and there's no, if we see even today, after such a successful decade or so in the startups, very few startups in India come with any path-breaking ideas. And there's absolutely nothing wrong with that, because India per se is the market. And I keep saying, in fact, this book deals at length with this idea that ideas are cheap and it's execution that matters. And if we take the example of Bhavik and Ola, when they launched, Uber was already existing in the global marketplace, but they fundamentally, the way they deployed it in India was meant for the Indian market. Whether it was understanding that in India, because of the sheer population confusion, you need an OTP, or whether it was understanding that we Indians always love to be on the phone, so having a free Wi-Fi calling facility, or OTT, all of these things, was absolutely Indianized for the Indian market, giving cash in India because not everyone had cards. So, that's what I mean. Ideas is one aspect of it, but execution is what matters.
Any particular reason why many startups who started off a few years back but are still not profitable? I think it's a very common question that comes in, right? That why are startups not looking to become profitable but are just looking to increase their market share?
It is basically startup, by the definition of what they are. They would be in new areas and new innovative areas. And fundamentally, because these areas itself are constantly emerging, there is a question of land grab, as you very rightly said. And that is why, especially in the consumer internet businesses, they are out there trying to capture more and more services. Also, what happens, and Amazon itself took 18 years to break even for the first time. It wasn't that they couldn't have broken even, but because they kept wanting a larger share of a bigger consumer wallet, they kept adding more and more services on the base of the equity they were raising. So, that is one of the reasons why startups, at least once they start having a path to profitability, Then it's a conscious decision for the startup, whether they want to use the equity they are raising for bigger market capture. Literally, if they have a path to profitability, then they can turn off certain growth elements and then just constantly aim for profitability. So having the path to profitability is very important.
Right. What have been the learnings from the pandemic for startups in the Indian, in the Indian space?
I think it's a very relevant question, and I can give example from our portfolio itself. Fundamentally, what this pandemic has shown globally is that technology and digitization is the way forward. And more than, everyone has sort of said that what this pandemic has done is it has fast forwarded the entire digital adoption right across enterprises by many, many years. And fundamentally, what this has done for tech businesses is all the businesses which are in what I would call which enable soft touch, they are the businesses which are scaling up very fast. And throughout the pandemic, we've started to see a number of new ventures which are rolling out throughout India, growth of the existing ventures. Some of the areas which we think will do very well in the pandemic, post-COVID, so to say, now that the pandemic is over, is the whole medtech area, the whole edtech area. Then one of the areas which has forced the pandemic to happen is, regulatory work which is now being done online. The Supreme Court has now allowed for affidavits to be sent by WhatsApp. It was something which is unthinkable and unbelievable. But, that is the way of things going forward. Another area which we think, which will really scale up very fast is collaborative working. Not just you and me having an interview through Zoom has become an acceptable thing. Before pandemic, both of us would try to see if we could do it face to face somewhere or the other. This has become the new norm. And not only this, I think collaborative working will happen. And based on that, one of the things we will see is teams will be much more diverse, spread out. And obviously the impact of that will be manifold.
Right. In terms of the Indian regulatory space, do you think that there are some needs? There is some need for a change in regulations for a more easier and friendly regulation?
I think there is always scope for regulatory change, and I'll touch upon that. But to be fair, the government has been trying to push the startup ecosystem for the last 5-6 years, whether it be through the creation of the fund of funds, or it be bringing about certain changes in the regulatory framework of how the startups are defined and all of that aspect. 2 or 3 changes are very essential. One, more or less, is on the taxation part of it. The private companies have to be brought on par with the listed companies when it comes to capital gains tax in the short term. From the 2 years, it has to be reduced to the 1 year in case of private companies. That's one. And secondly, very, very importantly, we were expecting this to be approved in this year's budget, although it's got the cabinet approval, is the fact that Indian companies can now directly IPO overseas without having to first IPO in India. Now, I think this is going to be a game changer, because you can see that it's the, in the Wall Street, especially NASDAQ, they understand loss-making businesses taking land grab for the future. And a number of such businesses have listed during the post-pandemic era. And there's a bunch of Indian companies who easily can do a listing in the US. And once that happens, I think the whole ecosystem will change a lot. So I think for me, this is the nearest thing. Apart from that, the obvious macro things which we keep talking about is to look at GST for the smaller companies with a different lens than you would look at the FTSE 100, looking at the filings, auditing for the smaller companies in a different way. That's of course there. And I think fundamentally, if we take a step back from these small delta changes, the government has to come up with something like a Companies Act light version for the startups, rather than trying to make small delta changes year after year.
Especially with the Companies Act, right? The changes have been like, there have been so many changes every year. There are like many changes that are introduced into the act. So I'm sure for a startup, it's difficult to catch up with
Absolutely.
all the regulations.
Absolutely.
Right?
Absolutely.
In your book, you've talked about the importance of choosing a right co-founder. Also, you've talked about how important mentors are. I just wanted to understand, in India, are how many big, mentors are active and have actually played an important role in handholding a startup?
I think the Indian ecosystem is at a very, very interesting stage, Ramya. What is starting to happen, and we all know it, executive lives have become shrunk. All of us, I'm in my early 50s, all of us, by the mid 40s, late 40s, you've peaked in your corporate career. And given the longevity that now we tend to have, everyone has another 20, 30 years of high intellect left. And friends of mine from my batchmates, from my engineering and MBA institutes, all of them, we are all seeing as to what next to do and how do you contribute at the age you are. And therefore, one of the very interesting phenomena which is happening is there's a group of people who today, you call it mentors, call it advisors, call it investors, come mentors, are out there who are looking at a second or third innings of their life, and they want to get actively involved with various startups. And this is, if you ask me, a right sort of marriage, because the startup guys obviously understand their tech, they have the drive, they can take the wherewithal of the rumblings of a startup, and these guys with their years of experience and corporate experience, they bolster the early stage thinking of the startups. So I think mentors are aplenty. It is a question of the startups to get the right mentor. Like everything else globally, and especially in India, along with the good comes a lot of bad. So there are a lot of people out there who are mentors wanting to get in the free equity or a free ride with these startups. But fundamentally, that's where a mature discussion has to happen from both sides. And that's where, VCs like us have a role to play in sort of acting like the marriage counselor, if you will, in this.
Right. You've also talked about some interesting phrases that startups use, startup founders use, which you don't agree with, on how, I have no competition and everyone is our target market. Can you just explain this a bit?
Yeah. There are some of these phrases. There's another phrase which you've not mentioned, but I know it's there in the mindset of a lot of these startup founders, is the fact when you're talking to them for the first time, that they are in it, again going back to my earlier point, for the glamour part of it, and they are there because they want to try their hand at it. For me, this is a recipe for disaster, because there is, when you've entered the startup, you must burn the bridge of return. There is no optionality in entrepreneurship, as Peter Thiel had rightly said. You have to be at it. And the moment you start thinking that, okay, if I fail, I'll go back to a job, then you might as well not start, because you're bound to fail. That is one of the sentences which whenever I hear, for me, that's a red flag. The other thing I hear is exactly what you said, we have no competition. That fundamentally means that you have not been able to define the market you are, because there are two types of competition. One is direct competition, and the other is what you're trying to get a share of, a competition of that. I mean, the example I have said in the book is, if you narrow your focus to so little and then to say there is no competition, that means there is fundamentally no market. It's like saying, in South Delhi, there is no Bengali cuisine market, so to say. Yes, there isn't, but that means you've narrowed yourself to so much that there isn't any market per se. But you're not there existing for that cuisine. You're there for taking a share of the wallet of the individual who's looking out to have food. So, fundamentally, you must be very clear into the overall market that you're operating in. In fact, there was an article about a year back, or maybe slightly more, in Fortune, which had the most quizzical headline, which said Netflix is the biggest competition for five-star dining, because people have stopped going out for five-star dining because they're used to watching Netflix and ordering food. So Fundamentally, where competition comes from, you don't know, but you've got to understand the macro.
Right. You also talk about how probably some startup founders quit early, and why they should not do that.
This is again going back to the point I mentioned about optionality. If you are, and this I've started to see with all due respects with a lot of folks who come out from my alma mater, the IITs per se, because they sort of give themselves false timelines. Because of the peer group that they all grow in, they know that somebody in their hall or somebody in their batch has achieved so much turnover in so many years and then got funded from XYZ in so many years. So these timelines hang on their head like Damocles' sword. And sometime when they see that the path that they are taking is not falling in those timelines, they think that they can't make a success out of it. They quit and go back to a job. Fundamentally, these timelines are wrong because, they have just created it for themselves. A business has its natural time for progression. A business will take time to grow. And as I keep saying, if you bat throughout the day, you will score 100. So you have to have the capability that when your form is bad, for 2 or 3 overs, you'll have to be able to play defensively to survive those bad 2 or 3 overs.
So, there's also a difference between experienced professionals starting off or, vis-a-vis a student fresh out of IIT, starting a startup.
There are challenges on both the sides. It's not that there are challenges only for the fresh young student. The young student obviously has much more energy, much more drive, much more ambition. Along with that comes a lot of lack of experience, not understanding the finer points, having the rawness, so to say, which has its positives and negatives. And that's where early mentors and early investors come into play to sort of guide them through it. But for seasoned professionals also, while on one hand, they know what they want to do, and they will put their own initial monies, which is a great sign of confidence for investors. They have their own separate challenges and more in the mindset, because having been in large corporates, they are too used to working in a particular way within corporates. Suddenly they are bereft of a secretary, bereft of a cabin, bereft of an executive assistant, and doing everything on their own. So while they know what they want to do, sometimes this lack of, this sheer anonymity, gets onto them. That's one aspect of it. The second aspect of it is, it's extremely, extremely important in a startup journey to have the full support of the family, be it your spouses, in your early years, your parents, because, without them, entrepreneurship doesn't work. It is all subsuming, and we all know that. And often startup founders who, after years of experience, are at that stage of their life with a growing family and the highest level of costs, where, despite their best intention, they are not able to sustain. So, understanding a sustainability of a founder is one of the key aspects we try to gauge when we are talking to when we are talking to early stage entrepreneurs.
Right. And how has the startup scene changed from the early 2000s to now, according to you?
I had my first venture which got funding in 2000 by one of the first VCs in India. That time there was literally a handful of people doing startups, and still less number of people trying to doing investing. The scenario today is very, very different from them. I think if I quickly give you a ride, between 2000 and 2006 was one type of businesses, very little startups happening and very few VCs there. Some of the big names today did come up from that point in time. 2006 to 2000, I would say 13, 14 was the period when the whole industry started kicking up. Angel networks started to be formed. Startups started to come into fray. Large number of startups started to come into fray, some of which are unicorns today. But the real consolidation per se, Ramya, has happened, in my view, from 2014 onwards. Obviously, against the backdrop of the whole digitization wave that the first Modi government undertook, with the coming of Geo and the cost of the data falling and all of that. And two big aspects happened. One is on the investment side. You had earlier, obviously the institutional investors existing, but now what happened is the Indian family offices started to understand that the startup was an asset class which they cannot do without. So every family office today invests directly in startups or in funds like us. That's one aspect of it. And then the startups matured. In 2014 and 15, you could do no wrong if you were a startup. Those were the days of, literally the gold rush. Everybody I would meet would think they could sign a check in a startup and, they'd make the millions. 16 and 17, if you ask me, were the watershed years where the industry matured. One, investors realized that signing a check for a startup was the easiest thing to do. After that, what? So a lot of Johnny-come-lately investors sort of went back and started to invest, if they did, in the asset class through funds like us. And two, the startup founders themselves matured. They knew that with the idea, business plan, and by just saying I have tag from so-and-so institute, nobody would just give them funding. And third, which we are starting to see, is now coming out of more seasoned exec turned entrepreneurs. So these things have happened. So I think the industry is still very nascent in India compared to rest of the world, but it's a great ride ahead.
Right. And, my last question to you, in which sectors do you think, Indian startups have managed to probably give competition to international, firms who've also entered at the same time? As in, where do we stand in some sectors?
So in some sectors, we are far ahead. If you take some of the fintech areas that India has, it's much ahead of UK and US. I mean, US definitely, UK is still a market leader and drives some of the fintechs, but fintech is one area where we are much ahead. Then again, in India, there's a lot of what I would call the innovation tech, which is meant for India. These are not there in the Western markets, because the Western markets operate in a different way. So, this is an area which I strongly believe will be very local within India, because India has a fragmented supply chain, size of the country, the complexities of it, which is why every process within India, if you take the agricultural sector, if you take, the medtech I touched upon, every sector in India is being digitized. So I think the local digitization story is a huge story. When it comes to the international, everyone knows that what the IT services companies did, it's a repeat of that being now done by the Indian SaaS companies globally. And that is just starting to see early days, yeah.
Okay. This should be my last question. What is your advice to startups?
My advice to startups is exactly the point. Stay focused in what you want to do. Be aware of, before starting your journey, be aware of all the negatives of the journey. Don't get carried away by what you read and what you hear about the startup winners. It's a very rough ride over there, but there's nothing taking it away. There's one more point, Remya, I'd like to say.
Sure.
I think one very interesting aspect which we are seeing, and answering your question of the changes in the startup environment, is till about 2015, I would say 16-ish, most of the startups we would see were from the three regions of, Bangalore, Mumbai, and the NCR region. Come 2020, we are starting to see startups right across India. And, as a fund, we have invested in startups from Cochin, Trivandrum, Hyderabad, Jaipur, Ahmedabad, Goa, Bhilai, unthinkable, apart from obviously these three regions. And this is something which even COVID has further done. It has sort of made people realize that you don't need to be in these central areas to do it. And I see that as a big wave going forward within India. Startups mushrooming from everywhere. And the example I keep giving to people is, you trace back 20 years, you see the Indian cricket team. It was only from exactly these three regions. Today you see the Indian cricket team, you don't even know where the people are coming from Ranchi, from Kashmir, from Gujarat, from Madhya Pradesh, all over. And that is a thing I'm starting to see in the startup world. And I think that is where the bright future for India lies.
And it does help the whole internet revolution that has come, right? The kind of connectivity that has now reached a rural village.
Absolutely. Absolutely.
Much, Bhaskar. It was really nice speaking to you, and you. Thank you.
Thank you very much, Remya. Good talking to you.
Thank you.